Hello everyone, I'm excited to announce that the Q1 13F filing for Michael Burry's investment firm Scion Asset Management was just released this morning. And to put it mildly, this update is significant in comparison with previous quarters for Michael Burry and his outlook for the economy. So today I will examine his specific updates as well as what this could mean regarding Burry's outlook on the economy and the stock market, so stay tuned. Hello everybody, welcome back to The Contrarian. For those of you who are new here, I call this channel The Contrarian because I typically come to a different conclusion than the majority of investors out there. I look at the facts and the fundamentals, and I don't look at the majority of investors' opinion or the sentiment out there. So if you like these kinds of topics and you get to the end of this video and you feel like I've earned a subscription, just consider subscribing, and also a disclaimer that this is not to be taken in any way as financial advice. So to get started, there is a context I need to put around this report I'm going to show you, and that is that this report is for Q1 of 2021. So this time period has obviously already passed. This is looking back at the time period of the first 3 months of 2021. So Burry already could have changed these positions, basically. So in going through this, we will need to sort of look, back in retrospect as to where these individual stocks and industries were anywhere from the beginning of January through the end of March. All that being said, let's get into the results, and they are very significant. Tesla, he's shorting Tesla with 40% of his portfolio. He's also shorting treasury bond prices, so he's betting on treasury rates and bond rates going higher. He has a call on Google. He has a Facebook call. He has a ultra short treasury call, so again betting that rates go higher and bond prices fall. He has a call on Kraft Heinz. He's shorting the Russell 2000. He has a call on CVS. He has a call on NetApp. Core Civic, now getting into his stock holdings. Core Civic, he held this since last filing as well. Ingalls Markets, a new addition. Zymeworks, a new addition. Lumen, holding that since last filing, and CVS, he has stock and calls on this one, so he apparently thinks CVS is a very good buy right now. And SunCoke Energy, Distribution Now, an energy supplier, RPT Real Estate, and then a whole lot of energy, finance, and a few more healthcare companies. So on all of these positions, basically, Burry should be up, depending on where he bought or sold, with possibly the exception of the Russell 2000, which Burry was shorting and which continued to go up during Q1 of 2021. Now, Tesla, in my mind, is the most significant bet Burry placed this quarter, having the level of conviction that Tesla would crash, to put 40% of his portfolio into puts on Tesla stock. This is a very ballsy move for him, but he's a very ballsy investor as well. But it definitely paid off. It definitely worked well for Burry. Tesla, during the first quarter of 2021, fell roughly 30% to 40% from its highs, depending on where you look at it. And remarkably, this fall in share price can be nearly identified to when Musk added Bitcoin to the balance sheet of Tesla. And this could have spooked a lot of institutional, more traditional investors out there. And in part, along with very, marginal growth and some pretty poor earnings calls, could have caused some of these hedge funds or institutions investing in Tesla to sell part of their portions. Now, looking at the remainder of his portfolio, it appears Burry is very optimistic, at least for the short term, in big tech and technology in general. And I say short term because he largely bought call options rather than shares in these companies such as Facebook and Google. And this short-term bullishness on tech is not unique to Burry. Other notable people who I like to talk about, namely David Hunter, has remained very bullish on technology going into this melt-up that he has talked about. Also, Michael Burry has grown in his liking for energy stocks. He's added a lot of energy companies to his portfolio. He added significantly in this sector, and this has been one of the best performing sectors in the beginning of 2021 and currently ongoing. And I don't mean to toot my own horn or anything, but if you guys have been paying attention to my videos, I alluded to this back at the beginning of February, just how fossil fuels were far from being over with any sort of green new energy coming about, and how increased regulation would actually increase the profitability of these companies. So just putting that out there. But Michael Burry is also optimistic in the areas of healthcare, consumer discretionary, and consumer staples, as well as finance companies. And I think finance companies also have to do with his bet that rates are rising, just because that will make a lot of these banks and a lot of these finance companies much more profitable when these rates do rise, in Burry's opinion. And he is namely also convinced that bond prices will fall and bond prices will rise, bond yields will rise as inflation begins to pick up. And two of his top positions reflect this, shorting the prices of bonds, essentially. And Burry has largely been proven correct in his warnings of runaway inflation before deleting his Twitter account. He warned of potentially hyperinflation that the United States might be facing. He definitely warned of increased inflation, and that has definitely happened since he deleted his Twitter account. This has panned out, and it has begun to accelerate since just a few months ago. So it's pretty remarkable, his track record as an investor. And now looking at his sales, Burry sold his stakes in Kimball International, Geo Group, Discovery, Molson Coors Beverage Company, and he sold his call for Citibank, as well as Wells Fargo Designer Brands, and some of his other smaller prior holdings. And now Burry is definitely a trading type of institutional investor. He is far from Warren Buffett's style of buying and holding forever, in that, in examining a lot of his past filings, these positions he's sold, most of them he held for under, 1 to 2 years. So, that is about it. To summarize, Michael Burry is very bearish on Tesla, he's very bearish on bonds, and he's very bullish, at least for now, on technology, energy, healthcare, and finance. So all that being said, I hope you guys enjoyed this somewhat brief video summarizing Michael Burry's Q1 of 2021 13F filings. I do think it is very significant, and he is a very interesting investor I like to keep an eye out on. Just with his track record, he's been very successful in a variety of markets. So all that being said, if you guys liked this video, give it a thumbs up. If you didn't like it, give it a thumbs down. Let me know why down in the comments, and I hope to see you again.